Hello, in today's market update, we're going to be talking about where are the prices going, what are the foreclosures, what's the outlook looking, and what's it coming, and also a recession is that in discussion. So I want to share and show some facts of what is kind of be happening in the real estate market. So let's jump right into it. Eric Hatch here with Century 21. Hey, I wanted to share here that Doug Duncan, a chief economist on Fannie Mae, mentioned on a quarterly basis, home prices rose a seasonally adjusted 1% in quarter 23. The fact that prices rose slightly in the first quarter, evidence of the significant pent up mortgage demand despite ongoing affordability constraints. So it's interesting to see here now that we got first quarter information kind of floating through that now they're saying that some home prices rose across the nation of 1%. Now, of course, different markets are a little different. Obviously, one might be 1%, one might be negative, one might be a little bit higher. But it's interesting to see overall of the arrays of what's happening. So let me share what's happening right here, because you remember this is the same graph that we showed that now we're adding each month onto it. And you can see that here we had the beginning of 2022 where the home prices were rising, and all of a sudden in July, boom, it just kind of like stopped. And then you can see that those people that purchased some homes then were a little bit negative. But you can see overall the numbers continue trending the upward motion here, that you can kind of see that people are kept telling me and saying, hey, Eric, the housing market's going to crash. The prices are going to continue going down. I'm seeing a huge crash. Guys, I'm going to talk about that here in just a moment on some negative news, but you got to look at all the facts of what's happening right now with the percentages of these on each month, that you can see the tick up of home prices beginning to rise again. And we're kind of showing the nice feature of coming outside of and out and up out of that decline that we had for those several months in a row. So here's Adam Walden, Enterprise Research on Black Knight, mentioned this. Just 5 months ago, prices were declining on a seasonally adjusted month-over-month basis of 92% of the major U.S. markets. Fast forward to March, and the situation has done a little 180, with prices now rising 92% of the markets from February. So you can see that things are now becoming to switch and kind of tweak. I like when people such as like Fannie Mae, who comes out and says in the March report that they said, hey, you know what, I think this year we're going to probably have a decline in housing prices of maybe 4% housing, a percentage of housing. And now they just made in the April report that, oh, maybe we're changing our mind. Maybe we're only going to see a slight decline in maybe some values. And you can see that they watch that, because they're seeing this and they're continuing to change, that things are looking a little bit better. I'm not saying that we're having this fabulous market or anything, but I want to share about what's happening with inventory and foreclosures. It's because the inventory is so historically low is why the real estate market is still being it's a great market. So inventory foreclosure update. I want to share this with you here about what between a buyer's and the seller's market. You can see in the the crash of 2008 and 2010, the inventory was just so much inventory that it was such a flood of a buyer's market. And you can still see it today with a 6-month supply right here, that we still have a seller's market. It's not as hot in the frenzy as we had, maybe 4 or 5 months or a year, even a year ago, but it's still showing a seller's market because the historic low of inventory is still historically low. So let's look at all this kind of negative news, as I was sharing earlier, about kind of what we're seeing. So you open up your news feed, you read a newspaper, you read your news feed, and it's just negative, negative, negative. It talks about U.S. foreclosures activity continue to climb in quarter one. More Americans are losing their homes in foreclosures and U.S. properties. Foreclosures on the rise, in Illinois, in New Jersey. Foreclosures filing jumped 22%. Repossessions hit the high levels in 3 years. The facts here, they are true that there are more foreclosures coming, and I'll show and share why that's happening. But you have to look at the whole picture here. You're looking at that they're panicking the public of all of these negative news and things of that's kind of happening. But check this graphic that we actually have for you today, that you can see back in 2017, because you have to go to the 2017, 18 to get kind of back where it was kind of norm and kind of the normality of things. And again, we don't wish foreclosure on anyone. Individual people go through health issues or situations that are troublesome, and we have a wonderful program. If somebody is in some type of foreclosure, reach out to me, because we have a program that our company comes in and actually helps get you out of that program by paying off some of your past or your late fees to be able to get you out of foreclosure. So feel free to reach out to me on another note on that, on a side note. But just wanted to share with you here that the average back then was about 600,000 in the country of foreclosures during 2017, 2018 numbers. You can see what happened here. And because of 2020, 2021 with the forbearance and the more, they wanted to, the country came out and said, let's try to keep that people not having to foreclose. So they did not foreclose. You could not foreclose on people during this time with the moratorium kind of coming through here. So now that's why you're expecting foreclosures. Now that that's over, you're expecting foreclosures to rise, and people are doing better than expected. And so you are seeing a little bit of an uptick right here, but you're still short that 273,000 people of our normal average of foreclosures on what transpired in 2017 and 18. So you can see here on this is that this goes all the way back to quite a ways in 2005, that you can see that we had a lot of foreclosures, and now it's just kind of coming down. So you have a little itty bitty uptick right here compared to what we were. There's just not a lot on there. I have seen there are a few other ones in our local market that are there that I've got lots of buyers calling and asking questions about. So they're there, but not just this crazy newscast that everything is is falling. So we can just look at the facts and see kind of where we really stand. Because here are the numbers. If you really wanted to see the numbers, that there were 95,000 properties that were foreclosed filings during the first quarter. A total of 65,000 properties started the foreclosure process. So there are some that are coming, but we're still historically way lower than that we had been before. Here is Realtor.com. Kind of summed it up kind of nicely here. There's no reason to panic, at least not yet. Foreclosure filings began ticking up in the late 2021 after the federal foreclosure moratorium ended. The moratorium was enacted in the early days of the COVID-19 when millions of Americans lost their jobs to prevent a tsunami of homeowners losing their properties. So again, that's why we're seeing this uptick, because there were some people there. But I want to show a little bit talk about this discussion of recession. Now, you need to realize and understand what a recession is. And when, back in 2008, 2009, when the crash, the recession became this scary thing, because it was horrible that so many people, millions of Americans, had issues and things about losing jobs and different things that it became a problem for us. So let's discuss kind of some things of what happens and kind of what a recession is, and getting to define of what a recession. Given their assessment of the potential economic effects of the recent banking sector developments, the staff projection at the time of March meeting includes a mild recession starting later this year with a recovery over the subsequent 2 years. So the Fed met in March. They said there's going to possibly be this small recession. Again, it's going to not be something that we've had in the past, like the scary big recession we had in the crash. But let's look at what a recession is. The National Bureau of Economic Research says a significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in the GDP, real income, employment, industrial production, and wholesale retail sales. So it's the slowing down the economy. We've known here that the Fed, with the raising of the rates, has tried to slow the economy down. So they're doing this slow down of economy, which then puts us into potentially a small recession, is kind of what they want, to slow that down to inflate. So let's see what transpires on some of these other staff. So how would that affect the housing and impact by a recession? So let me share this. This is awesome. Bankrate said, during a traditional recession, the Fed will usually lower interest rates. This creates an incentive for people to spend money and stimulate the economy. It also typically leads to more affordable mortgage rates, which leads to more opportunity for home buyers. So don't allow this, as you're going to hear all this news about this recession and what's going to happen in this recession. And again, the news is going to be a bunch of negative stuff, but realize that a recession is because they've been slowing that down to be able to get into, looks like, a recession, to be able to help that. Because then you can see the good news is that the mortgage rates will dip, which then the real estate industry then will pick back up, and it will start with the real estate industry because of the lower interest rates. So you can kind of look at this as some pros and cons of buying during a recession. Should I buy? Should I hold? What should I do? A lot of you right now are kind of on the same fence because the interest rates are a little bit higher. So you're thinking, do I just wait? And yeah, you can see that there are, if they excuse me, if traditionally, if the interest rates will go back down during a recession, then maybe some people might get to thinking maybe I should wait. But again, if you see the prices of homes starting to increase and then there's lower inventory, what's going to start happening is when more inventory comes in the market, you're going to be competing against a lot more people, even though interest rates might dip a little bit. So right now is an opportunity to purchase get a fixed interest rate, and then what basically happens is if in 2-3 months, 5 months, 6 months, 7 months, the interest rates go back down, you refinance. So pros and cons, there's less competition, lower prices, lower rates on some of the pros, as I just shared. Cons, stricter lending requirements. So if we get into this recession, maybe 5-6 months down the road, and now the lending requirements become more restrictive, so maybe that might price you out or buy you out just because of something there. Fewer options available, and then economic uncertainty, which means possibly lose a job or recession. So job security and stuff. So I want to show what this really means in the last 6 recessions of what basically transpired. Again, you guys, 2008, this is huge. This is what I was mentioning, that people think, oh, recessions, that's a horrible, because this isn't our short-term memory right here. But if you look at the last 6 recessions that we've had in 80, 81, 91, you'll see that like 4 of them, actually, the housing prices increased during a recession. So don't think we're going to have this other 19%, because the facts just aren't there that the market is crashing. It's actually going up, and prices will continue to rise. So you can see as well here, recession does not mean that the falling mortgage rates. I like this, that during a recession that they did lower. I mean, this was a huge, back then when interest rates were 17 and 18%, yeah, absolutely 5% was needed. But, we just had a lower. So, it might not be like it's going to come down to, we're not going to get to the 2% or the 2.5% interest rates anymore. I just don't see that happening. So when we're looking at, hey, I'm going to wait for the interest rates to go down, it could just be like 0.5% or 1% or maybe 1.5%. So this is kind of what's happened with those. So it's not going to be this huge drop. So there might be opportunities for you to purchase now with having the seller give you a credit to buy down your rate 0.5% to 3/4 point, and then be ahead of the trend when you can actually find a house in today's market, because there's less buyers and competition out there. So that would be kind of a fun little graph there too. And I want to show you one of them that I really kind of enjoyed, that the current rate on existing mortgages right now, and this is a very intriguing fact and an interesting thing to figure out, is that you've got people that are 3%. There's so many people that have mortgages that are 3% to 4 or less than 3. So a lot of people right now, and hence why the inventory is not there, is because you have a lot of people right here that aren't going to sell their home because they don't want to give up a 2.5 or a 3% interest rate to change it into a 5 or 6% interest rate. So that's why the inventory is staying low, because people are kind of holding tight and maybe changing their plans and not selling at the moment. But you can still see you got 8% or so people that have the 6%, and then you got this big group. And so these numbers will start to rise as people need to move and make the move, or more people get into home ownership. You're going to see this graph rise a little bit on here. But you can see a lot of people bought the 4 to 5%, and now when the interest rates go down, they're just going to refinance is what they'll end up doing. And that was quarter of 2022, by the way, on that one too. And I thought this was a really fun graph for you guys to see here, that to see kind of where people are at, because people learned from 2018 and the uncertainty. So people actually went going into this looking a little bit different about, I'm going to protect my equity. We have so many homeowners have the equity right now of the mortgage homes greater than 50% equity. That's amazing. The prices have increased so much the last 4 or 5 years that they have a lots more equity in there. And you actually have people that actually have 38% of the country that own their house free and clear. So that actually right here is, we're getting a lot of sellers. I've had a lot of cash buyers who are selling their homes, getting their money, that they have a free and clear home, and then just buying another one free and clear. So this is where obviously would be our amazing goal for all of us to be able to get to one day. And then you've got mortgage homes less than 50% equity. So there's not a lot of people that are going to be going into foreclosure, because there's so much equity into the people's homes right now. So I thought that was a kind of a fun little graph as well. So guys, just wanted to share with you on that one. We'll end there, but just wanted to let you know that You'll hear some negative news, but just look at the complete facts of what's happening. Reach out to me, contact me, talk to your real estate professional, understand kind of where things are at and going. And I hope this information helped you. And please, let's connect on other social platforms. Please subscribe to my channel down below as well. And we'll talk to you soon. Take care.